What's up, everybody? Dave Bartosiak, and I have another chart of the day for you. This time, we're talking about Royal Caribbean, ticker RCL. Now, real interesting stuff here. Royal Caribbean's done a lot better than the other cruise ships. So, heading into COVID, this was a stock that was $134. And look at that precipitous drop, because when the world stands still and your bills are still due, this is what happens. So Royal Caribbean got down to the 20s. So you're talking $20 and not under 20, actually, 19.25 on March 18th. It's about as nasty as it gets, but it had a nice little bounce. Get back close to the century mark before the sellers kicked in. Now this is a lesson in patience, my friends. Another failure at that $100 level. Stock comes down under pressure again. This time doesn't quite get to those lows, right? And I want to point out, look at the volume on these lows. Tons of volume. That's tons of people coming in and saying, you know what, this is too cheap. And not just people, this is institutional money stepping in and saying, no, we got my spots. So when it retraces and gets all the way back down here, close to 30, not too many people that had the conviction to buy the stock up at 100, it used to be $1.35, and continue to hold it when it's down here. That's why I'm always a big advocate for dollar cost averaging. You believe long-term in the company, you're just adding little by little, right? Okay. And then what happened? I mean, just nuclear. Look at this from the lows. Getting back, never mind the COVID lows, right? Just these July, summertime 2022 lows when we're all just starting to get back on cruise ships. And what has transpired? Following its last earnings report, stock's at 208, right? Far surpassing where it was heading into COVID. That is pretty remarkable. And look at some of these events that happen on this chart, right? You get this big downside move, hits the 200-day, takes out the pre-COVID highs, and that's where they're sitting waiting to buy with both hands. So if you're patient and you wait for these retracements to a 200-day on a stock that you like, and obviously this is some Monday morning quarterback stuff, looking at Royal Caribbean going, wow, you sure should have done that, right? But just in general, if there's a stock that you like, got a good earnings, trend, how do you find that? Zacks rank number 1, Zacks rank number 2. If it's retraced that 200-day, it's usually a pretty good time to buy. You see another dip there earlier this year. And then now we're at stratosphere. This is coming off another big earnings report. Okay, thanks a lot, Dave. Doesn't mean anything now that we're at highs, right? But it does. So if you're a patient investor, what do you want to look for? You want to look for a move back to this 200-day. And it may feel like you're never going to end up getting it, right? Well, that's when you can use your 50. Am I going to get back to the 50? Yes. I'm going to tell you right now, the stock will get back to the 50-day, right? Does it feel like that now? Because 50 days down in 180, not even, it's 179.16. It's going to happen again. And you see this big push above 200. We're going to get a little bit more granular on this. Let's zoom it on in. And you can see, look at how many days this is where we're battling at or just above or just below 200. 1, 2, 3, 4, 5, 6, 7, 8, 9, basically 9 sessions, finally get up. And then yesterday, look at that range. That's about as bullish of a move that you want to see. Take out the lows, rally up to new highs, and then today it's sort of, floundering, fluttering. I would expect after this is hit, you're going to have to get a little bit more inside this candle for shorter term opportunities, right? So basically half of this range. So this is 214 on down to 197. So it's a $17 range, right? So $6.5 or $8.5 rather in between there. Place you might want to buy, right? The 50% retracement of that move. If Jeremy Mullen was on here, we'd be talking about 61.8s, 38.2s. You can do that for short-term areas of entry, right? But bigger scale, longer scale, have a little bit of patience. Wait for a retrace back to this 50-day. Because in the meantime, you're going to have all types of stuff going on, and you might get some FOMO as this thing is screaming higher. But the fact of the matter is, waiting until stock hits the 50-day is just a better idea. It's just more prudent as an investor versus chasing something up at the highs. Because there's a much higher likelihood that it eventually makes its move back to the 50-day, then it runs away from the 50-day forever. We all know it never does, right? It doesn't run away forever. You can go back historically, these interactions with the 50-day, even if this was a fresh push above it, eventually it gets back to it. Okay? Eventually it gets back to it. And that's what, if you're patient, wait for the long run, you'll end up getting there, right? That's if you're worried about timing and entry. Now, if you don't care and you're like, I don't care, I'm just going to invest every month and wherever it is, but then this video isn't for you, right? We're trying to be a little bit more tactical with things. So really high value entry is going to be the 200-day. Less high value is going to be the 50-day. But just have some patience and put a name like this on your radar, right? So you come up with your list of stocks that you think are a good idea to buy and wait for these retracements to happen, and you can go ahead and buy on those dips. So one thing I want to show here real quick. I know I talked about this. I led into, actually, I'm going to flip this on its head. Never mind that. We're going to go this way. When we deal with these retracements, there's also extensions. And look at this. Now, what did I say? 17 was 17 and change here. Let's see. 19 and change rather. 1925. So I'm going to try to get as close to 1925 as I can. Here's a little trick. If you hit the settings menu on this, you can make these coordinates specific. So I could put in 1925 here as the low. I can find the exact high. Again, charts don't care as much. Like, you're not going to, granted the algos are programmed to these levels, but it's not like a set here or there or 5 cents or even 20 is gonna make or break the whole idea of this. But you want to get close. 135.32. I think that's what I see as the high. Okay. So again, let's go in here. 135.32. Check out how cool this is. Just so happens that the 60.18 extension of this move, right? Basically take this, move here, and just like we have these values here, we mirror it over to this side, right? So now the 60.18 extension is 207.05, which is right about where that stock was messing around. And we got an intraday wick up here. Maybe it goes further. So from there, with this software, you could go ahead and use all types of different extension levels, right? So we've got the 1.6, 2.6. How about we just do 1.5? A little bit closer. And then we'll put 2. This will give us some shorter term targets. And then just like you have the 0.786, we can do that here. We can do 1.786, right? And I'm going to throw in just a couple other ones, not to turn this into a whole rainbow to confuse everybody, but just to hammer home some points, is the 1.382. Okay, so now we're going to have all these. Never mind the rainbow below. Let's look at the, now I messed it all up. Never mind the rainbow below. Let's focus on this rainbow above. And what I mean by that is above this 135.32. Okay. And if you notice this little bit of interaction here. Now, granted, these fib levels, these extensions were drawn at here. So you could have drawn those in 2020. Okay. And what happens here? You get a little bit of a hiccup. There's an above and a below. That's resistance right there. So we saw that happen, saw it develop. And then what's this? Little wick above, a little bit of resistance, came down below. So you could see these levels in the charts. It's pretty remarkable. And now you got this latest bit that's happening where market's trying to decide, is it going to close above that level? Is it going to dip down below that level? So you're starting to get these levels of resistance that are coming into play based on that extension. What you could also do using these SAM extensions, which is pretty cool. I don't know if I just messed it all up, but now if we go this way, just on the latest move, you see these show themselves up again, right? That 61.8 extension off of this move, we got the 78.6. So when you draw these for multiple different time frames, they call this a confluence of resistance or confluence of support. You can thank Joe DiNapoli for that one. So that's areas where there's just several of these levels coming into play all at the same time. So something cool to see there using the fibs. Not surprising that we're sort of battling around here and these low 208s. Our longer term guy looking for this, I'd be waiting for a little bit of a dip. You can also take a look at some of the other cruise ship stocks. You got Royal Caribbean, but what about Norwegian? What's happening over there? Tell you the truth, stock doesn't look as good as this one. Say that much. Could have that been a balance sheet related issue? That's going to be a case study for another time. So, all right. So thank you so much for checking out my chart of the day. Not going to have one for you tomorrow. We're going to have to wait till next Tuesday. Go ahead and bust that one out, but I'm sure it's going to be a good one. So be sure to follow the author here on Zacks.com. Don't forget to subscribe to the YouTube channel and check us out next week. I'll be here. Nobody else. Me all by myself. So for everybody here at Zacks, I would say thank you. We'll see you all